This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 3rd, 2011, at approximately 8:40 in the morning Mountain, 10:40 Eastern. We're taping on a Thursday instead of a Friday morning. Harold has an engagement he has to go to tomorrow. Next week as well, because it's Remembrance Day, we'll be taping on Thursday morning. Should make note for everyone who listens to us in Edmonton. Next week, we will be on before the hockey game on 6:30 CHED at 2:30. 2:30 to 3:30, we will be on the air prior to the Edmonton Oilers playing. Don't forget, our show does run on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, we're archived on Harold's website, HESradio.com. You can also hear the shows on Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, or HESradio.com. To this point, it has been a crazy week. Last week we had the EU bailout, and then there was a head fake by the Greek Prime Minister Papandreou, coming out and wanting to do a referendum on the rescue package, whether or not Greece would stay within the Eurozone. This morning, as we tape this show, rumors of him being ousted, having to resign. As I read on Bloomberg, that is not the case. There will be a confidence motion here in the next day or so, whether or not his government survives. It's chaotic. As a result, Harold, gold and silver doing very well this morning.
You better believe it, and that's actually surprising, seeing that there is problems again in Europe, because the beginning of the week, we saw the exact opposite. We saw the world stock markets open up extremely strong, 2, 3, 4% higher, because it looked like everything was working out in Greece. But examining what the documents were and what the deal was, it just didn't make any sense that this thing was going to go through. Basically, again, the markets have been choppy, but it's building a very strong base, and all in all, gold and silver are looking very bullish to me. I'm pretty positive that we have seen the bottom of the market when it fell back last month in October, but all in all, the markets are looking very strong. As we're trading today, gold is trading at $1,765. The silver market's back up to $35. Don't forget, it was recently at as low as $26, so it's come back $9. The oil market's been extremely strong. We've always been bullish on oil, and oil's back up to $93 as we're taping the show on Thursday. Canadian dollar's back up to 98 cents. It's hovering very close to par with the U.S. dollar, and the U.S. dollar, which trades against a basket of foreign currencies, is trading at 77 cents. The important numbers for the U.S. dollar, 71.5 cents on the downside. That's where the heavy support is for the U.S. dollar. If it breaks that level, the U.S. dollar will fall substantially. That's a very, very key number. And then on the upside, 84 cents on the dollar. But again, a lot of it is tied into the euro. The euro actually has been very strong this week, except for today, obviously, because of the breakdown in the situation in Europe with Greece. So all in all, choppy markets, but what the market is doing right now is building a very strong base, and that's extremely important. Again, when the markets fall the way they did in October, and again in April, just before May actually, the market has to recover. And what it's doing right now, I'm extremely comfortable with. The thing that I wouldn't be comfortable with is the market dropping from $44 down to $26 in silver and then coming right back up to $40, $45. So, again, those are not the type of markets. This market is trading like an actual bull market. It's actually 11 years now that we've been in this gold and silver market. Gold started out at $250 and it's hit a high of $1,900, and silver started off at $3.80 and it hit a high of $50. This bull market is very strongly intact. We're extremely bullish on both metals and on oil, and we're very bearish on the U.S. dollar. So the fact is that the situation in Europe with Greece right now is extremely confusing. One day the deal's on, the next day the deal's off. But the bottom line is that they owe so much money that there's no easy solution to this. In fact, my feeling is that they're not even close to a deal. So what should happen is we should see continuous volatility in the market, but a lot of it is going to be to do with the fact that they're going to have to print money, just like the U.S. is printing money, just like every other country that gets into trouble prints money. And when you print money, your currency gets devalued. It drops in value because there's so much more of it onto the marketplace. That's why we're so bullish on gold and silver, is because of the future for the U.S. dollar. The U.S. dollar, which was one of the strongest currencies in the world, is now bordering on one of the weaker currencies in the world, and because there is no growth in the United States at this particular time, and there probably won't be for quite a few years, the fact is that there's no money coming in. The easy solution is always to print money. And by printing money, again, all you're doing is prolonging the agony, because what you're actually doing is inviting inflation, and that's exactly what is going to happen, which is why we're still very, very bullish on the gold and silver market. In fact, if you look at the newsletter this week, it's extremely strong, and there's some extremely strong information in the gold section. Basically, Wall Street always talks about gold being in a bubble. Gold is nowhere close to being in a bubble. In actual fact, we're probably a third of the way, possibly, through this bull market. We've got two more phases coming that will initially bring gold above 2,000 to 2,200 to 2,500 more than likely next year. But there's levels way above this. Now, obviously, we need to see what gold and silver does to further analyze how much higher the market can go. But again, judging by the charts that I'm seeing and what we're looking at, again, I think that we're about a third of the way there, and I believe the gold will be above the $6,000 level within the next 2 to 3 years. So again, we're still extremely bullish on it. My suggestion is to own the gold physically. I've always recommended owning the gold outright, because again, this is a market that has moved up every single year for 11 years in a row. And there is no sign that we're anywhere close to the bottom, that this market is going to finish its bull market and pull back. There's no reason for that to happen. In actual fact, the reason that we have been buying gold and silver for all these years is primarily because of the weak dollar and upcoming inflation. Now, inflation in China is substantially high, and they're raising interest rates, which is what is the proper thing to do. If you go back to 1979 and 80, when we had massive inflation, and we had interest rates go all the way up to 20%. So basically, the way that a country will fight inflation is not by weakening their dollar, it's by strengthening it, and the way that you do that is by raising interest rates. Well, the U.S. came out, and the Federal Reserve came out yesterday, or this week, and they said that they see that they're going to keep interest rates at zero till at least the middle of 2013, which tells me that by doing so, the dollar has continued to weaken. And by weakening, gold and silver will go substantially higher. So again, we're very, very bullish on the markets. The fact that it bottomed out during October is building a very strong base and is now coming back very strong. Again, get the newsletter this week. It's very important. There's very strong information in there. The other thing is that we are coming to Edmonton on November the 28th to discuss all the things that we're talking right now on the radio show. It's so confusing out there for most people to understand what to do when countries are going bankrupt and currencies are changing in the way that they are, and there's so much misinformation out there. So we felt that it was time that we come up to Edmonton for starters. So on November the 28th, at 6:30 at the Fantasyland Hotel in West Edmonton Mall, I will be there with Randy Marshall. On top of that, Worldwide Precious Metals will be there giving a presentation on the metals markets. I will be doing a full presentation on the world economy and letting you know what we expect to happen going into the last quarter of this year and going into next year. And then on top of that, with Argyle, they've given us an amazing presentation on what's coming up in Pink Diamonds. So it's going to be a thrilling seminar. It's filling up very, very quickly. So basically, you can go on HESradio.com, my other website, HESradio.com, and sign up for tickets. Now, we decided not to charge for tickets. I don't want anybody paying to come to see me, especially in this economy. So basically, it's free tickets. It's going to be a phenomenal concert. It's going to open up your eyes to what's really happening in the world financial markets. And as you well know by listening to the radio show, as long as everybody has, we're extremely conservative here. We're not big risk takers. So basically, the game plans that we have set out for next year, I think, make an awful lot of sense, and it just makes sense to come up to Edmonton and explain everything in person. I've got so many friends and clients up there. I've been doing business in Edmonton for over 15 years now, and I'm very excited to come back up and see everybody. So So go to HESradio.com, sign up for our seminar. Again, the tickets are free, and we're going to have a great time. It's going to be a very informative presentation. If you would like to see me personally, there are still a couple reservations available. I'm coming up for Monday and for Tuesday, but it has filled up fairly quickly, and there was only a couple spots left if you did want to meet with me personally. If not, you can certainly do it over the phone or over the internet when the time is right. Also, if you do want to set up an appointment with Worldwide Precious Metals, you can go to their website, www.pmc.com, and you can set up an appointment to talk to them about gold and silver. Again, we're heading into some of the most confusing but exciting times that we've ever been through, as long as you're on the right side of the fence. The last place that I would put my money at this particular point is in stocks and mutual funds, and the reason for that is because the inherent danger that's out there. Again, what's happening with Greece right now, what's happening with other parts of Europe and in the United States, I just don't invest money in a country that's going bankrupt. It makes no sense. There's no growth coming. So basically, the markets trade only on what the hedge funds are doing, and their hedge funds don't care technically what the market does, because when they go into the market with trillions of dollars, which they're doing, they're moving the markets, to whatever level. They could pick up 10 or 15 or 20 cents on a stock and still make a fortune. So the market has totally changed from when we first started to trade. When we were younger and our parents and grandparents told us what to do and how to build wealth in real estate and in stocks, it made sense back then to buy General Motors and Chrysler and the right companies and stick with the Fortune 500 companies, those type of things. But those days have changed. In actual fact, in 2008, everything changed. When Lehman almost went out of business, or when they did go out of business, they crashed the market. The stock market dropped from 14,000 all the way down to 6,500. That was the Dow Jones. The TSX plummeted. All the markets plummeted. Oil dropped from $150 to $30. So again, the risk in the markets at this particular point and going forward is like nothing we have ever seen before, except for 2008. And there are people that are very, very intelligent that are predicting the same type of market conditions that happened in 2008 that are going to happen again within the near future, and that could be 2012. So again, we are coming up to Edmonton to do this seminar. We will be coming to see our friends in Toronto in the springtime. So again, we're very excited about the information that we have, and it's imperative that you get this information if you're going to go forward and make the proper investment decisions.
Are there lots of companies out there now that are talking about investing in precious metals? You bet there are. How many of them were around back in 2001 when Harold started doing the show after 9/11? Or when I started doing the show with him in February of 2002. How many people were around back then? Not many. In fact, we were heavily criticized for talking about precious metals. There are a lot of companies out there, but there's only one company that Harold recommends, that is Worldwide Precious Metals. He believes they're the people to deal with. Give them a chance to earn your business. As Harold was saying, if you're in Edmonton, would like to meet with them on November 28th, the days around it, go to the website www.pmc.com and you can sign up to meet with them when they're here in Edmonton to invest in precious metals. Speak with them, 1-866-623-2002. 1-866-623-2002. Their website, www.pmc.com. I should mention that we have our free weekly newsletter. They send it out via email free of charge. Harold does as well. You can get the email from either Harold or Worldwide. Connect with Worldwide, 1-866-623-2002. Quotes from the newsletter this week. Gold is heading into the 2000s. The mess in Europe is incurable and can only be damage controlled by quantitative easing. That by Jim Sinclair. Michael Pinto said inflation and interest rates in the United States are about to soar, and the ultimate bailout of the American citizen can only be found in gold. Jim Dine said this week, the people who own it, gold, own the ultimate money, and they don't have to depend on anybody else. Our chart of the week, and Harold alluded to it off the top, we have a great picture here, and then we have another chart as well I was able to find. John Paulson, he's a money manager, and he is very bullish on precious metals. He gave a speech during the week in New York City to the Chinese Finance Association. He discussed gold, inflation, the outlook for the economy, and where he's investing. The key point, he is still a big believer in gold. He thinks that the talk of gold being in a bubble is ludicrous. There is a trader, and she posted a picture on Twitter, Brenna Hardman, and we have that picture in our newsletter. John Paulson, getting him mixed up with Hank Paulson, the former Treasury Secretary. John Paulson, there's a picture of him giving his talk, and he shows exactly how much money is in gold. And we have this other chart as well, and it basically breaks down to the amount of money in money market funds is 9.1%, fixed income 48.7%, equities 37.2%, alternative investments 4%, and gold 1%. And the picture that John Paulson has is the same, and that is that basically U.S. pension funds are holding 1% or less in precious metals. And that obviously is not a bubble by any means, Harold, when you take a look at the bigger picture. When we get up to higher numbers, as was the case back in the 80s run, then we obviously will potentially could be in a bubble situation, but we are so far from it, it is not even funny.
You're 100% right. First of all, I don't agree that interest rates are going up in the United States at this particular point at all. So they're not if the Federal Reserve said the other day that they're going to keep interest rates at zero till at least the middle of 2013. So, again, I don't think that we have to be concerned about rates going up in the U.S. What we do have to be concerned about is inflation. And inflation is definitely here, and inflation is going to grow because just look at the price of oil and just look at the price of food. So all in all, if they do not raise interest rates in the U.S., which, again, I believe they will not do that, and even if they did attempt to do it, you would have to raise interest rates so substantially to see any change in the marketplace that I think it would be very discouraging for them. So I highly doubt that that's going to happen for a while. I do believe that we will see interest rates go up maybe in about 2 to 3 years, but I think that interest rates are going to have to go so substantially high, I'm thinking 15, 20% to overcome the inflation that we're going to have. Just food and oil prices alone are going to wreak havoc on the markets, and then add to the fact that the U.S. dollar is going to break down, which it has to. As soon as they bring out QE3, which they have to do because there is no growth in the economy at all. And we know that you cannot grow an economy when the general public, when the middle class America is not spending money. And it's because they don't have any money to spend. Once the real estate market plummeted and took away everybody's wealth, and then the stock market fell, the middle class doesn't have any money. So basically, how is the economy ever going to grow if they're not spending money? Because without paying sales tax and income tax and that type of thing, the U.S. just continues to go further and further and further into a black hole. So all in all, I'm extremely bullish. I think you're 100% right, Randy. That chart shows that only 1% of the investments are in gold, and we will not see a bubble until the general public is buying like crazy, and we're probably 2-3 years away from that happening, just the start of it. So all in all, that chart makes a tremendous amount of sense and should give a lot of comfort to people that have invested in the gold and silver market.
And that is a recent chart, too, very up to date. The telephone number to invest in precious metals, 1-866-623-2002. The website, wwpmc.com. Worldwide will be in Edmonton at the seminar that Harold is putting on November 28th. If you'd like to meet with them when they are in town, go to their website, wwpmc.com, or speak with them at 1-866-623-2002. Morris Hubbard said this week, silver remains one of my favorite assets. I expect silver to trade with gold in the shorter term, followed by a command performance similar to what we saw in the spring of this year. Technical patterns, sentiment, and smart money buyers indicate that silver could possibly be the best investment opportunity available to investors for many years to come. Eric Sprott said this week, I've heard lots of information from people that are in the coin business that there's almost equal interest in silver as in gold in dollar terms. How can it be that the gold to silver ratio is 50-1 when the demand is 1-1? That can't carry on. And the gold silver ratio is 50-1 right now. At the peak when silver was up around $50. That's when we saw the gold-silver ratio around 30. Recently, we saw it 40, and here today it's 50-1. Agree with Eric Sprott on that. Also, James Turk saying the silver formation projects a spike to the $60 to $75 level. That's based on technical analysis. Last week was absolutely spectacular, with silver rising more than 13%. What's really important is the weekly silver chart. Silver is forming a beautiful long-term, what he calls flag consolidation pattern. The flagpole starting about 2010 at $18 and peaked at $49 earlier. We are now in the flag, and we can expect a breakout, I think, within the next few weeks. Here is the good part. It projects a $60 silver price, but given the strength of the pattern, one could easily see $75. The shakeout over the past 6 months has put a lot of people on the sidelines. I don't expect that money to come back into the market until silver goes back above $43. When silver takes out 43, it should skyrocket just as it did earlier this year when it nearly doubled in price. And I know Peter Schiff, he gave us a silver update this week when asked about silver specifically. I like the chart on silver. Silver has lots of upside here. They really couldn't get it much more below 30. That's pretty solid support. The only real resistance is up around 50. We're going to eventually go through 50, so buy now. John Embry, on his silver update, when asked about silver, Embry replied, "The action is looking very good in silver. This bounce off 30 in the last week, trading at one point well through 35. I think it's a precursor to a big move. I think silver can easily go through $50 by the end of the year." We have an actually interesting video, link to a video in our newsletter from Ross Beatty, who is a silver executive of a silver mining company. And he says that the great thing about silver, as we've talked about for many years, it's a dual metal. It's a monetary metal. It's an industrial metal. And Harold, we have about 2 minutes left here. Obviously, that's one of the reasons that we really like silver, because of the dual role that silver does maintain.
You better believe it. Again, silver's my favorite. We think it's going to go substantially higher. I'm thinking $150, $200 or more before this whole thing is over. Don't forget, when the general public does start to buy, gold will be at $2,500, and they'll look at silver as a bargain, and basically that's another reason why the market's going to go up more than the gold market will. So all in all, I agree with everything that you've found in the newsletters this week, Randy. I do believe we're heading into a very strong last quarter and a very strong year to the year next year. And again, I'm looking forward to coming up to Canada to do our seminar to enlighten everybody as to what we're looking at.
Don't forget, if you live in Edmonton, next week our radio show runs at 2:30 to 3:30 prior to the Edmonton Oilers playing. That is before the Oilers hockey game next week, 2:30 to 3:30. If you would like to join us at the seminar that Harold's putting on November 28th, 6:30 at the Fantasyland Hotel here in Edmonton, you can go to Harold's website, HESradio.com, and sign up for free tickets. HESradio.com. You can speak with Harold, obviously, about meeting with him privately. You can also speak with Worldwide Precious Metals about meeting with them privately. The telephone number to invest in precious metals, the only company that Harold recommends. They've been in business the entire time this bull market in precious metals has run. Worldwide Precious Metals. WWPMC.com, the website. Telephone number 1-866-623-2002. Speak with them about receiving our free weekly newsletter. And when it comes to investing in diamonds, which we're going to talk about shortly, rarecoloreddiamonds.com is Harold's website. The telephone number is 1-800-432-1022. 1-800-432-1022, rarecoloreddiamonds.com. Big diamond news this week. There's going to be a major pink diamond for sale, and we'll talk about it as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 3rd, 2011. Our time is 9:05 Mountain, 11:05 Eastern. The radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, they're archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. Don't forget, Harold's coming to Edmonton November 28th, 6:30 at Fantasyland Hotel, West Edmonton Mall. If you would like to meet personally and privately with Harold, there still are a few slots available. You can connect with him via, obviously, HESradio.com. His website is rarecoloreddiamonds.com. The telephone number to speak with him is 1-800-432-1022, 1-800-432-1022. When it comes to investing in precious metals, the company Harold recommends you use is Worldwide Precious Metals. Their telephone number, 1-866-623-2002. The website, wwpmc.com, wwpmc.com. They'll be in town when Harold gives his seminar. If you'd like to meet with them, you can arrange through the website or by calling them an arrangement, obviously a time that you could meet with them when they're here in Edmonton. And you can get our free weekly newsletter from Harold or Worldwide. On the diamond side of things, our featured Diamond of the Week. This week's diamond is a 1.36 carat radiant cut fancy intense yellow, internally flawless. This diamond will increase in price by 25% a year and in times of high inflation. Back in the late 70s, early 80s, they've increased by 500%. There are very few diamonds like this available. The color is very, very intense. And Harold highly recommends this diamond for a great long-term investment and a strong hedge against inflation. You can watch the video. You can go to Harold's website, click on the featured diamond. You can see this diamond spinning around. It's spectacular. We have a picture of it in the newsletter, but watch the video. The way they've put together the video is simply stunning. And one of the stories coming out this week, Sotheby's, New York, going to auction a rare, fancy, intense pink diamond ring at its upcoming sale, Magnificent Jewels, December the 10th. Check that, December the 7th. The pink diamond ring is a corner-cut, square, modified, brilliant diamond of 22.17 carats VS2 clarity. The estimate on it is $13 million. The entire sale, the value of it is roughly $50 million, and it will travel to Geneva, Los Angeles, Hong Kong, before returning to Sotheby's, New York, for a public exhibition beginning December the 3rd. So you can see these diamonds are like museum pieces. Only 24 diamonds of pure pink color weighing over 10 carats have ever appeared at auction, placing this offer obviously in the noteworthy category, up there with the Graph Pink, which became the most expensive diamond sold at $46.2 million at Sotheby's Geneva 2010. Pink diamonds of significant size have historically been held in many state and royal collections, including those of England, France, Iran, Holland, and Turkey. And in our newsletter, I was able to find this is actually quite interesting. Click on the link. It'll take you through to the major crown jewels of countries around the world, and that includes our Queen, Queen Elizabeth, the Queen of Canada, and the Commonwealth. But, Harold, exciting news. Obviously, the featured diamond is stunning, and we have that pink for sale. So lots of good news again this week in the diamond market.
You better believe it. That is a gorgeous diamond. The thing with pink diamonds is that they're just going up through the roof. And pink diamonds is what we've recommended to our clients on the radio for the last 6 years. So basically, pink diamonds come from the Argyle mine in Australia. 95% of them do. And the mine is going to close down by 2016, latest 2018, and there will be hardly any pink diamonds available. They're very rare and scarce anyways. Now, don't get concerned or turned off by these high prices, that these diamonds are going for $46 million and $50 million and $20 million. The fact is that most diamonds are nowhere near in those price range. And there are certain diamonds that have phenomenal track records that you don't have to spend or invest that type of money in which to make money in the diamond market. I've been in the investment business for 35 years. I started off as a collector in colored diamonds, and now one of the largest dealers in the business. I sell probably half of the pink diamonds in the world. It's a passion of mine. Those are my clients that own pink diamonds know exactly what I'm talking about, because as soon as you look at one of these diamonds, you're just in awe of their beauty. And the fact is that these pink diamonds from the Argyle mine are so valuable, they never ever decline in value. And when you take 95% of the world's pink diamonds off of the marketplace, which is going to happen in the next 4 years, the prices go up substantially. Now, again, we've been through this before with blue diamonds, and the price of blue diamonds went up 700% in 3 years once the mine that produced the blue diamonds closed. So, again, we're looking at the same phenomenon happening in pinks. You can get involved in pink Argyle diamonds starting at $20,000. We anticipate when the mine closes in 2016, which is only 4 years from now, give it 2 years for the diamonds to run out, and when there are no more pink diamonds for sale, these diamonds at auction could go up 8 to 10 times what you paid for them, meaning a $20,000 diamond could turn out to be a $200,000 diamond when we take these diamonds to auction for you. So the Argyle pinks are amongst the best investment diamonds that you could possibly get. There are diamonds that are much more expensive. Red diamonds are the rarest diamonds in the world, but they start at $2.5 million. The first red diamond that was ever sold in the United States was sold in 1950 for $18,500. By 1986, 35 years later, that diamond sold for almost $800,000. So it went from under $15,000 to over $800,000 in 30 years. Now that diamond is worth $3 to $4 million. So that's what happens when you hold on to diamonds for the longer term. For those that are investing in diamonds or anticipating investing in diamonds, they're very safe. They never, ever fall in price. And again, they have the potential to rise very, very quickly, especially during times of high inflation. But if you're going to buy a diamond and sell it within a year from now, you're just never going to make any money. And I would highly recommend that you don't even waste your time investing in the diamond market if you're only going to do it over a short period of time. History will show you that these diamonds, certain diamonds, double every 4 years in price. Yellow flawless diamonds and Argyle pinks, because they go up by about 25% a year, they double every 4 years in price. However, when the Argyle mine closes and there's no more of these diamonds, that's when we anticipate a huge payday for our clients. So most of my clients that own colored diamonds own yellow flawless and Argyle pinks. They're put aside in safety deposit boxes or set in magnificent pieces of jewelry so they can be enjoyed for the next 5 to 10 years. Again, during times of high inflation, there's very few investments that do better than colored diamonds. Gold and silver do extremely well, but in 1979 and 80, when we had 20% interest rates and double-digit inflation, gold went to $850, silver went to $52, but colored diamonds went up 500% in 2 years. It means that if you buy or invest in a yellow flawless diamond, either a fancy yellow, fancy intense, or fancy vivid, those are the colors that we recommend, they go up by 25% a year, but they can go up 400 to 500% with upcoming inflation. And we know that inflation is coming because oil prices are high, food prices are high, and the value of the dollar is extremely low and dropping. So again, my strongest recommendations at this point is to get something into the rare colored diamond market. They're portable in private wealth. Nobody knows you own them. They can be sold in other currencies. You can cross a border with them where you cannot do that with any other currency, but rare colored diamonds have never ever fallen in price. So we're recommending, for example, a $20,000 yellow flawless diamond of over a carat could be worth $100,000 in the next 5 years if we're correct on inflation. The fact is that these diamonds always go up by about 25% a year, and you'll see these increases coming going into 2012. So now's an excellent time to invest in pink and yellow flawless diamonds because, again, number one, they're extremely difficult to get. Number two, the prices are increasing substantially, and if you want to make the maximum return on your money, you should look at doing this prior to going into next year, because again, we're going to see at least a 25% increase in the price of yellow flawless and Argyle pink diamonds. There are some Argyle pinks that have gone up more than 25% from last year. In fact, some of them have come close to doubling, and those are the vivid pink flawless, the vivid pink Argyles. They're becoming nearly impossible to get. In fact, what's happening with Argyle, and I'm going to do an amazing presentation at our seminar, so all those that are coming to the seminar are going to get to view these diamonds on video and see some of the most amazing diamonds and statistics that you'll be very, very excited about. But again, We're only concentrating on the two markets, the yellow flawlesses and the argyle pinks, because they're still affordable, and the fact is they go up more than almost any other diamond percentage-wise. We're very, very excited about what's happening in the diamond market, and the fact is that in the last 15 years, there have been no diamond mines that have come online that produce any quantity of colored diamonds at all. In fact, it takes 100,000 carats to find one colored diamond. One colored diamond out of 100,000 carats. It takes 1 million carats of white diamonds to find one pink diamond. That's how rare pink diamonds are. So again, if you're in mutual funds and stocks, I would be very, very concerned. There's a time and a place for every investment, and again, the risks in the paper asset markets at this point are extreme. You're seeing the stock markets going up one day and down the next, and if that's where your retirement capital is and your other investments, I would be very concerned about that. My strongest recommendations is to get out of those assets at this point. You'll have an opportunity to buy stocks back at very cheap prices 4 or 5 years from now. Every market has its time. During times of high inflation, you need to invest in hard assets. Gold, silver, diamonds have always been that type of asset, and all you have to do is go back in history and look at the numbers, and the numbers don't lie. So again, realizing that we're going to head into the most confusing, the most volatile, and the riskiest times, my suggestion is to get very conservative, to get out of the markets where you could lose all your money and put some money in safe assets like diamonds. If you sold out of some of your stocks and put something into a diamond, a yellow flawless or a pink, it gives you a fighting chance of conquering the upcoming inflation. And that's where the major problems are going to be. So again, with what's coming up, to liquidate some of your losing assets and put it into something that's going to grow for you over the years and sustain your money, that's one of my strongest recommendations. So go to our website. We're converting our entire website, rarecoloreddiamonds.com, to video, and the videos are spectacular. It shows you every aspect of the diamonds. We're doing that for our pinks and our yellows. We have green and blue and red diamonds are going to be videoed. We've got some of the most amazing opportunities for our clients coming up. And again, at the auction, this is the most exciting thing at the seminar coming up. I invested $9 million in yellow, flawless, and argyle pink diamonds. I bought out the last 2 quarters of production of argyle, so by the time we go up to Canada to present our new diamonds, nobody has ever seen these diamonds. They're just coming out of GIA. They've just been cut and polished. They're brand new, beautiful diamonds, all certified by the Gemological Institute of America, and they're all going to be ready for the seminar. Again, you want to get into these diamonds before the end of the year because we see price increases coming into 2012, and they could be substantial. So again, we're very excited. We've got a beautiful new cut and polished argyle pinks and beautiful new yellow flawlesses coming out, and we're really the only firm that has any selection of these diamonds. And we're also the only company that owns an auction business that will resell these diamonds for you down the road. So again, Randy, I couldn't be more excited to present our new diamonds. And again, we certainly put our money where our mouth is. If I'm recommending these diamonds to my clients, it's because I bought them already for myself, for my family, and again for our clients for many, many years now. And when you see our new argyles and yellow flawlesses, you're going to flip. These are the diamonds that you want to own.
Well, one thing that Harold is ahead of the curve on yet again, and he's done this consistently with the diamond business, obviously talking about diamonds as an investment when no one else did. He had the historical value tracker system, and now he's brought the live video to diamonds. So when you go and head to his website and look at the featured diamond this week, that 1.36 carat radiant cut fancy intense yellow internally flawless, you will see the video. You will see all sides of that diamond. Nobody else is doing that. Once again, Rare Colored Diamonds on the cutting edge. RareColoredDiamonds.com is the website. Speak with Harold. The telephone number, 1-800-432-1022, 1-800-432-1022. One of the things I'm looking forward to actually seeing at the seminar, Harold, you touched on it, is that they actually showed a diamond being cut, and they are doing a time-lapsed version of that. And that will be very fascinating to see.
You bet. I'm very excited. Nobody's ever done that either. So, again, we actually filmed a diamond being cut and polished, a colored diamond. We actually cut and polished it. It was a 3.5-month process. It was videoed and reduced to a 3.5-minute video. On top of that, we're also going to show a video on setting Argyle pink diamonds. So it's going to be a thrilling presentation. Also, Argyle has given me some information as to what their upcoming marketing is going to be, and we're going to present that also. So again, the seminar is going to be outrageous. We've got a lot of information on the world markets, on what's happening in the metals markets and currencies and everything, and then we've got one of the great presentations on diamonds that you're not going to want to miss. On top of that, we're going to feature and show our new diamonds that, again, we just had cut and polished from Argyle and from our Yellow Flawlesses. You're going to get to see these first on our website, all in video. So, again, I'm very, very excited about coming up to Edmonton. Again, it's going to be on November 28th, 6:30 in the evening, Fantasyland Hotel. We don't want anybody paying to come to see us, so we're taking care of it, and it's going to be a tremendous evening, and I can't wait to meet all of my clients and friends. I know the people at Worldwide are looking forward to the same. You can go on my website, HESradio.com, HESradio.com, and sign up for your free tickets, and you can also go on Worldwide Precious Metals website, and you can sign up for an appointment to see them if you want to also. So, again, we're coming out to Edmonton. I'm coming all the way up from South Florida, where it's 85 degrees and sunny, to visit my friends up in northern Edmonton. And again, I'm very excited to do so.
Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Telephone number 1-800-432-1022, 1-800-432-1022. Precious metal side of things, the telephone number 1-866-623-2002, wwpmc.com, and you can speak with Worldwide about investing in precious metals. Some of the interesting news of the week. This morning, the EU, they lowered interest rates from 1.50 to 1.25, caught a lot of people by surprise. And it was interesting as well that, no, not a real surprise, but the Fed sees downside risks. They left their policy unchanged. The interest rates basically at zero. They see significant downside risks. Chicago's Fed Chair Charles Evans has urged the Fed to actually inject more stimulus into the economy. He wants more stimulus. Ben Bernanke says that more stimulus is on the table as risks remain. That's why people believe there will be quantitative easing 3, which will be very positive for hard assets. The Fed actually cut their growth outlook for 2012 and for the next few years in the United States. The debt increased in the United States by a whopping amount, $203 billion in October, $650 for every man, woman, and child in the United States. They have a massive debt down there. We talked about the situation in Greece, which is fluid right now. We're not too sure exactly what's going to happen. Stay tuned to business news, obviously. They'll keep you up to date. But it's a mess over in Greece. They're given a bailout, and then they turn around and ask to do a referendum. Here they are being rescued, and they're going for a referendum to stay in the Eurozone and whether or not people want the rescue package. Will the Prime Minister Papandreou survive? I guess time will tell. There are whispers of return to the drachma in Greece. So it will be quite interesting. Greece, actually, they have an aid package coming their way. That has been put on hold, and they need that money by the end of the year. So it's a very, very strange time for the people of Greece. Also, MF Global, they collapsed this week. And John Corzine used to be the governor of New Jersey. He was heading that organization. They collapsed. Bill Gross says that, you know what, it just goes to show that people are losing more and more confidence in large organizations that take incredible amounts of risk. Also, Bruce Crasting had an interesting article. You can find it in our newsletter. He talks about inflation. The folks at the USDA in the United States made their projections for food price inflation. The bad news is that feeding themselves in the United States will cost 4% more. The good news is that the USDA thinks that prices will only go up 2.5% next year. But he's saying, Bruce Crasting, saying my food inflation is closer to 10%. It depends on what you eat. You take a look at meats, poultry, and fish up 6%, seafood up 6.5%, beef up almost 9%, fresh vegetables 5%, cooking oil 7.5%. It depends on what you eat, and you can obviously have a much higher inflation amount when it comes to the food that you actually buy and take home. Also, taxes in the United States getting to be very, very high. The average U.S. sales tax is hitting a record high. Obviously, cities and states run into financial trouble. Tuba City in Arizona tops the list at 13.725%. Shoppers in Chicago and Los Angeles pay 9.7%. And one of the stories that really caught my attention, Harold, was that Iran is in the focal point again. Israel considering a preemptive strike on Iran. The Prime Minister Benjamin Netanyahu is trying to rally support in his cabinet for an attack on Iran, and they were trying to have a preemptive strike to stop the nuclear program that Iran is putting together. So, you go through what's happening in the world financially, geopolitically. Now's the time to have hard assets in your portfolio.
You better believe it. That's all scary stuff, Randy. That's all very concerning and frightening stuff. Again, if Greece goes back on their old currency, you want to talk about inflation. Inflation will be Zimbabwe type of inflation. So, again, unfortunately, that's what happens when the euro is going to fail, and there's no doubt it has to fail. It will fail within the next 2 years. What's going to happen in the world currency markets is so extreme, and again, most people don't understand the currency markets. I get a lot of calls asking, about the relationship to the dollar and how, we figure the price of the U.S. dollar. So I know a lot of people are concerned about that, and that is something that we will be addressing at the seminar also. But it's the currency markets that really are really in control of all of the markets. And the fact is that with what's happening in Europe, by their currencies falling, it means that they have to print more and more and more money to deal with inflation, and then you've got, again, a whole new situation. So this is something that's not going away. It's going to get more and more extreme. That's why I'm saying that the next 5 years are going to be the most extreme markets that we've ever dealt with, and that's why it's important that we understand what we need to do, and that's why we're coming up to Canada to do our seminar. So, again, all in all, we've got to watch very closely to what's happening in Europe, because all the banks are all hooked in with each other, and the derivative markets are the most dangerous markets in the world. When you talk about derivatives, most institutions don't even understand what they are, and they're so heavily leveraged, and when you have to unwind them, it really causes a massive problem, and that's what happened with Lehman, and that's why Lehman went under, and the whole financial market almost crumbled at that time. We're in very delicate situations now. Again, we need to know what to do, and again, conservatism is one of the most important things at this point without taking major risks. So all in all, again, the gold market, very bullish. The silver market, the same, extremely bullish. Diamonds have never been more bullish than they are right now, and again, I'd be very concerned about being in the paper asset markets.
I agree with Harold. The financial crisis of 2008, nothing has changed. They have not done a thing to prevent future crises. And the truth of the matter is we're seeing it with Greece, and there are other problems in Portugal, Italy, and Spain that have not been dealt with. This is not over by a long shot. The United States, as I mentioned, $203 billion in debt for the month of October. To give you an idea, a record 49% of Americans live in a household where someone receives at least one type of government benefit. According to the U.S. Census Bureau, 63% of all federal spending this year will consist of checks written to individuals for which the government receives currently no services. The White House budget offices are estimating that. That's up from 46% in 1975 and 18% in 1940. And then you have 75 million baby boomers about to retire, wanting to use their pension, their Medicaid, their Medicare. It is a very, very dicey time. Some 15% of U.S. citizens use food stamps. Nearly 15% of the U.S. population relies on food stamps in August, as the number of recipients hits 45.8 million. Harold, we have about a minute left. You look at what's happening on a macro level, a micro level. It is a time that people need to really be awake to what is happening and really be cautious. You don't want to be wiped out, your finances be wiped out in the times that we're living in because of a bad decision.
You better believe it. And again, it's very, very easy to do that. That's why I'm saying, that you really want to be conservative and you don't want to take unnecessary risks. So all in all, it's a very dangerous financial world. Next year is going to be one of the most extreme years we've ever seen. And again, we just want to make certain that we're all on the same page. The most important thing is that we get through these difficult times and preserve our capital and put ourselves in a position to where we can take advantage of undervalued markets. So I'm very excited to come up to Canada. It's going to be a great seminar, and it'll be a lot of information for our listeners.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. For those in Edmonton, next week, we're normally on at 3 o'clock Sunday afternoon. We'll be on at 2:30. We'll be on before the hockey game. If you ever miss a radio show, the shows are archived at HESradio.com. Also, Harold's website, rarecoloreddiamonds.com. Harold in town, November 28th, 6:30, Fantasyland Hotel. For tickets, go to HESradio.com. To invest in precious metals, the telephone number 1-866-623-2002, the website www.pmc.com. Worldwide, they'll be in Edmonton when Harold's here. If you'd like to meet with them, give them a call, connect with them through their website. Harold's website, rarecoloreddiamonds.com, telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.